Oh, we're live again. It is August 16, 2022. I'm your host, Robert Keens of goldsilverpros.com, and we are back with another Tuesday edition of Cowboy Metals Live, broadcast every Tuesday, 5:30 p.m. Central Time, 6:30 p.m. Eastern Time. Looks like our sound check is good. Thank you, everybody, for joining. We'll get into the topic here in a moment. For today, the title of the topic is China and Japan Meltdown, set stage for another precious metals run. And I thought it was a good time to look at geopolitical risk. Let's look at economic risk and how that may manifest into certain decisions from certain countries and how it could affect the global economy and the US. I'm going to talk about foreign direct investment. I'm going to talk about the banks, which is probably the single most fragile area of the economy that doesn't get credited with being fragile. I think there's a false sense of security. We're going to talk about Japan shutting down its Congress and everybody walking out and resigning the same day as they do basically a political reset. And a lot of other stuff. We're going to talk a little bit about the 𝙁 report and what's going on with gold and silver positioning. We're letting people load in. We've got about 61 so far. Thanks, everybody, for joining. For those of you just joining, we'll get the presentation here in just a sec. As always, I put a poll up on the lives. I want to get your opinion on a specific question. And of course, you can ask questions in super chats, which are available. Which will pop up right in front of me, and I'll see the question, I'll be able to answer them, and I'll try to answer questions as the chat rolls along. I'll do my best. Okay, so the whole question is, are China and Japan on good footing, or is this just another global risk factor to be concerned of or concerned about? 10% of you said yes, they're solid, 90% no, they're not. That's probably based on my title. I'm saying they're having a meltdown, so we'll get into that. Appreciate Peter Frohwein for being here in riding shotgun as always, and being channel moderator. Thank you, Ralph Potts, Jake's Custom Parts, Gilbert Rogers, MN Island, EC660, and I believe 𝙂𝙊𝙇𝙍 for being here. Christopher Bustle being here. Appreciate everybody being here. We're going to jump right into it. Now, today, I really wanted to take a look at the global economy instead of focusing on strictly on gold and silver or what's going on with the Fed, because everything's connected. And I'm going to make the case tonight that anything that happens in China, Japan, Russia, Australia, large swaths of Africa, especially big economies like Europe, can really affect the United States and the rest of the West and everything that's going on. We're all interconnected. And I'll show you that through the concept of foreign direct investment, bank lending, and who's doing that. And we've got a report for that. So we're going to get a little bit geeky and get down into some banking details, but I'm also going to keep this a bit lighter because we've been hitting so much research lately. I don't want you guys to get worn out. So as we get into the presentation, we'll go ahead and do the screen share. Looks like we've got sound and everything is rolling. So today, the first article I wanted to take a look at is titled China Unexpectedly Cuts Rates as Terrible Economic Data Confirms an Alarming Slowdown While Yields Plunge. So one thing that we've noticed about the China economy, this is the biggest thing that I want you to see. This is the credit growth, and that's total financing and renminbi-based loan. You can see that here, and it has basically plummeted. So the total flows are down. Government bonds are still there. Loans have fallen. However, a lot of these acceptance bills and things like that are down. So this basically symbolizes that total financing in renminbi has cratered. Now, it's not the first time it's cratered, but if you look right here, if you go back to the chart, this is a very low number compared to all previous periods. So we're looking at about 4 years worth of data, and this is a huge plummet in terms of where China is in terms of their loans. Why is it important? Well, in the Chinese economy, much like in any economy, a lot of the liquidity, the loan creation is what spurs economic growth. It's a debt-based system. So when that debt level falls and there are less loans, as we see in this chart, it basically means the economy is slowing down. Of course, we knew the Chinese economy is slowing down because we talked about Evergrande and Cynic and the slowdown in the mortgage market, the potential meltdown there, and the semi sort of bailout that may be going on between some of the Chinese state-owned entities that China was said to have encouraged to bail out Evergrande, some of these other mortgage groups. But yeah, you can definitely see it started to hit the banking sector. And it's not just the damaged property sector in China that's doing it. It's all across the board. And this article really goes in to talk about it. Here's a good quote. The dominating downside risk for growth and weak data prompted the People's Bank of China to lower the policy rates. So the People's Bank of China is cutting. Why are they cutting? Because they're in a recession. They're trying to spur more lending, and they're trying to get this up. They're trying to get loans up. So they're cutting rates to encourage people to take loans. Of course, this is just going to make the problem worse because they have too many damn loans out already, just like the United States does. But that's what they're doing. Their response to this is we have a slowdown, we cut rates. Now, this could be a preview for what happens in the US. At some point, the Fed could pivot and also ease and become more accommodative in the economy to try to slow a deepening recession. But if the White House has its way, they're not even going to declare a recession. And I think people are confused as to whether they're in a recession or not. And that leads to a lack of, I think, fundamental understanding of the market about what's going to go on. So I think right now we're in a huge period of uncertainty here in the US. And I think that also in that same period as well in China. I'm going to come back and just take a look at the stream, make sure we're going good. We've got about 140 people in. Remember, there's a poll up. Thank you, everybody, for joining. Okay, we're getting back to the presentation. Here we are. Second piece is this happened, I think, back in April. A surprise sacking at China Merchants Bank frightens investors. One of the world's largest banks sheds tens of billions of dollars in market value. Dollars, so this is US. This is big, okay? China Merchants Bank has always stood out from the pack. It was founded by former communist guerrilla in 1987 as China's first commercial lender with a corporate shareholding structure. That's right, a former communist guerrilla started this bank in the 80s. So you had to know it was going to be the most stable bank ever, because why wouldn't you connect banking with communist guerrillas? In any case, it says here, it is a part of a group with ties to Qing Dynasty project that sought in the 19th century to build an indigenous steam-powered shipping industry, so on and so forth. The English name merchants is a poor rendition of the Chinese, which is better translated, blah, blah, blah. Anyway, they go on to talk about the issue. The issue was there is a graft investigation with people basically stealing throughout the bank. China's financial, in the article, one of the most important parts of this is about not just the bank, but China's financial sector. It says here, China's financial sector is in the throes of yet another corruption purge. On April 18th, the bank's board removed its president and chief executive, Tian Hu, without explanation. Mr. Tian had not been accused of wrongdoing, but local media have linked his removal to a corruption probe that has shaken the Shenzhen branch of CCB, his previous employer. Several of Mr. Tian's former colleagues have been investigated for serious breaches of law. The incident rocked China's merchant bank share price, which is now 29% below its peak last year. This is back in April. This is not now. By April 21st, its market capitalization had fallen to 162 billion, placing it behind its state-owned rivals. More worrying are the long-term implications for the bank's operations. I'm going to get to that in a minute. I'm going to show you something that happened with the bank's operations. This was very, very predictive, this article. Mr. Tian had run China Merchants Bank since 2003. Its ability to keep managers for long periods set it apart from estate lenders, blah, blah. So just talking about the company, it was really stable. It would consider one of the better ones, but yet in the 18th of April, there was a little bit of a panic. And this came out just recently in the last few days. This is a translation of this, of the website for the bank. It's one of their latest announcements. And it says, "Dear customer, in order to adapt to changes to the market situation and better protect the rights and interests of investors, this Chinese bank has adjusted their personal paper precious metal two-way trading business, personal two-way foreign exchange trading business, personal firm paper gold, paper silver trading business, and the 𝙎𝙬𝙇𝙍 business as follows." And basically it says customers who hold positions and spot inventory customers of the above should open their accounts on October 20th. All of the paper trading from this bank on the precious metals markets has been suspended. And this occurred through a series of tweets. The bank's tightened precious metals business, China Merchants Bank account, precious metal business will be suspended. So now this isn't all of the Chinese market. I think it was being interpreted by the Twitterverse and social media as, hey, we're in this situation where China is basically stopping paper trading on their gold and silver markets. Well, that's not quite the point. It's one of the banks, and it's because they had issues. And I think the problem is not specifically that they're ceasing operations in precious metals markets. I think it's that the bank is melting down, and this is an indication there's major issues with the banks in China. And by the way, if they go down, we're in serious trouble too. I'll show you that in a minute. All right, Steve Ross Holmes, thanks for the contribution. Steve Ross Holmes says, "I hear it is not wise to travel with 1 ounce gold coins and that silver is safer. How about numismatic silver coins with the same value as gold coins?" I would say probably as long as your value is not above 10,000, you declare it. And I'm just saying what I've been told as a traveler. Disclaimer, I'm not a financial advisor. I'm just telling you what I'm told as a traveler. This is just my own opinion based on my own experience. Declare anything over $10,000 that could possibly be considered money, including gold, silver, and cash of any type of currency, and anything else that adheres to those guidelines. But if you're going to travel the coin, if you just travel one, you're probably okay. They could confiscate it. I've heard that, but usually it's when you're traveling with a bunch and you exceed the amount. Silver could be possibly safer because it's cheaper. And so, yeah, you could get through, but you'd have to carry a lot more for the same amount of value. So it just depends on what you're traveling with. Good question, Steve Ross Holmes. Thank you for asking it. And back, ladies and gentlemen, to the presentation. So why do we worry about the Chinese banking system? Why do we care about Evergrande? Why do we care about any of it? Well, I'm about to go on a series of articles and things to show you why this matters. And I've talked about this before. I wrote a big article on Seeking Alpha probably a year or two ago about this issue emerging in China. And I'm going to expand upon it, not just in China, but foreign direct investment and why the banks are all essentially intertwined. And if one banking system goes down, the others are in trouble. So this from Trading Economics shows foreign direct investment. What is foreign direct investment? It's when a foreign party through their bank or through their corporation or other entity invests in a country. In this particular case, we're looking at the flows into China from outside China. And you can see with the exception of January 2022, we've had pretty robust inflows. And we're going to see in a moment how the yearly inflows have really gone up. But the trend, even if you go out 10 years, has been up. There's a lot of money in. And it's a lot of money in. Notice the trend. A lot of money in end of the year, and then it falls. Middle of the year falls, end of the year falls. There's probably tax reasons why this pattern has emerged. I find it funny, but in any case, you see the flows coming in, they've been increased. How do I know that they've been increased? Well, this is from Santander Bank. I had to take a screenshot because I couldn't get the website to stay up without these annoying pop-ups that Santander has. So I just took a screenshot, but this is from Santander. And whenever I want to look at foreign direct investment, which companies and which banks are investing in which countries, I go to Santander because they have this really great report. And you can see that 2019, 2020, 2021, the total amount of inflow into China has gone up from 141 billion to 180 billion. So the amount of people investing in China has gone up. Are those banks? Are they corporations? Who's at risk? Well, I'll get into that here in a moment. A couple of things you want to note is most of this actually comes from mainland China, but it's considered foreign because it could be foreign parties, but it could originate, and it gets a little confusing as to how to read this, but essentially we're talking about foreign direct investment and where it comes from. But the people investing could actually not be local banks, and we'll get it, or local entities, and we'll get into that in a minute. You can see a lot of it comes from mainland China, but you can see the USA is in there, 2%, Japan's in there, 3%, Cayman Islands, Germany. So the West and the West allies have a lot of exposure into China. Now, China's mainly investing in itself, but the American banks and the Western banks have been in here. And they're in here for manufacturing, obviously, because they want China to manufacture stuff. Well, who are they manufacturing for? A lot of European and American companies. It makes sense that they would invest in China and they would take loans in China that would be tied to the American companies. So now you've tied America and China together, and you've tied Europe and China together, and they're all invested in each other, which is why you have an ecosystem of international banking that you have to pay attention to. And you don't want any of that ecosystem to melt down because it could spell trouble for you. It's not like in this world now, you can go hide in a corner of the world and you don't have that risk. No, you always have the risk because we're global, and that's the way this bad boy works. So then we're going to talk about the Chinese economy. And I saw this from the Southern China Post, I think. I go to this website all the time. I forget the name of it, SCMP. But they have some really good data a lot of the time. And here's like a chart of foreign direct inflows, but I like this little graph. Basically, since 1984, China has gotten a crap ton of foreign direct investment, and it's done nothing but go up, whether we're in recession or not. Here's a little blip of recession, and it went right back up. So American companies, European companies, Western companies, anybody outside of China, Japan, all those guys that we saw over here, all these guys in this table have been investing this much over time. So you can see there's basically almost a 40-year history where everybody's wanted to invest in China. So if China has problems, guess who has problems? All the people that put this money into China now have problems. And that could cause a run on the global banking system. It's a point I made a year or two ago in an article and a video. I wanted to make it again. It matters what happens in China, in Japan, in the US, because the economies are tied together, not just geopolitically, not just from a Cold War perspective, not just from a resource perspective, but it matters. So do global banks facilitate foreign direct investment? So how much of this foreign direct investment is actually done by banks versus individual parties or corporations or whatever? Well, a lot of it. And here's a good paper. I'm just going to read the conclusion, but essentially they determine this. When foreign direct investment comes in, let's say Bank of America decides to put some money on behalf of Ford Motor Company into China to help develop their product, okay? Develop a plant or their presence, whatever. Advertising money, all that good stuff. So let's say they do that. What will happen is the China banks and the Chinese companies, the local banks, will then invest also. So as more foreign direct investment comes in, what this paper proved was then the Chinese banks and corporations also invest. So foreign direct investment is a catalyst and a spur for local investing. So when foreigners come in and invest in China, locals will see that as a sign that the economy is growing, that people are interested, that there's opportunities, and they'll put their money in. But it also went on to show that banks are one of the main ways in which countries get investment. And they get that investment to essentially build their economies and things like that. So there's a conclusion in here I'm trying to find. We need to get to it here in a minute. I'm going to read real quick the conclusion. It says here in this paper, while conventional wisdom has it that banks follow customers abroad, this paper provides, to the best of our knowledge, the first set of evidence that the presence of foreign banks subsequently boosts foreign investment by non-financial firms, and in particular, when from the same home country. On average, one standard deviation year-on-year increase in stock of home origin banking foreign direct investment leads to 19% more non-financial foreign direct investments. In other words, once the investing gets started, it starts coming all over. Anytime a foreigner invests in China, everybody else piles on, whether local, domestic, or outside. And so people have been piling on, and that's why we basically have had this chart in China for that long. And the banks are involved, and the paper goes on to say that the banks are involved. So the banks have to have a lot to do with it. And it goes on to talk about the banks down here, but just take my word for it without going through the whole thing. There's a lot of American, European, Japanese. Who is it again? It's these countries: Cayman Islands, Germany, Europe, and other people over the years that have invested in China. So if China goes down, our banks potentially could see problems. So I'm going to come off the share here for a minute, check on the chat, make sure everything's going good. That's the China piece of it. And all I'm talking about is the banking system. I'm talking about systemic risk going on in China, talking about what their central bank is doing, talking about adding on to the problems we knew happened in their property sector, a $61 trillion market, which is the biggest single asset market in the world by far. And it's double the size of the US property market, the US stock market, and the US bond market individually. So we knew that Evergrande and Cynic and those companies were going to cause problems, and we're starting to see it in the banking system. If you remember back to those videos when I covered Evergrande, I said, and this is really probably beginning of year last year, whenever this all started, I have to go back and look. But I said, this is going to affect the banks. And it's not only going to affect onshore banks, but offshore banks. And then we got the news on Evergrande specifically that only $2 billion of the $20 billion that they owed offshore got their money back, where most of the domestics got their money back. So they were prioritizing domestic firm reimbursement, probably at the urging of state officials, or at least their investors, but they weren't paying as much back overseas. And so now the problem is getting worse, because it's not just the property sector. We saw earlier when I put up the chart of the central bank and what's going on in the economy, lending across the board in China has absolutely crashed this year. And that's why the central bank is easing. So now China's stuck between a rock and a hard place. They can't raise rates and tighten. They've got to loosen. That makes their situation that much worse, because now they have accommodative policy heading into a recession, when all eyes are on a recession, not only in the US, but in China. That's a bad situation. That's just a bad combination of factors for China. That's just, you don't want to see it. And in the US, you don't want to see it. It's not like we're rooting for them to go down, because they're going to take us with them. Who's the #1 trading partner of China? The US. Who's #2? Well, I'd be Europe. Do we want the entire Western system, financial system, to crash because China's having problems? No. Out of spite, we may say, oh, the Chinese, we've had our issues with them politically back and forth. Personally, I have no issues with Chinese people at all. My ex-wife was Cambodian Chinese. But I'm saying, like, politically, we would say, well, we don't care about the Chinese. Look at, what advantages they have, blah, blah, blah. But that's not productive, because as the Chinese go, we go. And we got to recognize that. And that's something I want to point out. And I think when all this stuff goes down, China, Japan, Germany, Europe, the US, it's going to be another reason why gold and silver are going to run. And I'm just pointing this out. This is a huge reason why I expect gold and silver to run. I expect it to run hard because the problems in the global economy for which gold and silver are traded globally are getting worse and worse and worse and worse. And the central bank will react, but it doesn't always solve the problem. And sometimes it exacerbates it. We saw that with Evergrande in China, and now we're seeing it across the board. And remember when I did the Evergrande videos, I said, it won't stop at the property market in China. It's going to go everywhere. And this chart that I put up earlier, I'll put it up again here, is talking about lending across all issuances in China. It's talking about it all. So let's go back to that. Here's the lending, from the Zero Hedge article, is down everywhere. Okay, and it's talking about all this kind of stuff. So it's not just for the mortgage market, it's across the board. And that's an important thing to understand. So craziness going on in China. Now let's shift gears and let's go talk about Japan. So I posted this today on Twitter, and the immediate reaction when I posted this today on Twitter about Japan government resigns in its entirety was, first of all, I've confirmed this with about 7 or 8 different articles. It was in different papers around the world. There were Middle Eastern ones, there was a Russian one, there's a European one. So I've confirmed that this is actually true and this has happened, and it's reported all over the place. But when I posted on Twitter, there was like a delayed reaction. People were like, say, what? Japan's government resigns? Why in the hell would that happen? Well, let's go read the article. And I'm going to tell you eventually why this happened. And this is why certain political events will lead to certain economic events, which is why you kind of got to cover politics. You can talk economics, because politics is a distribution of wealth, essentially. It's how society votes on how the money will be spent. So you have to look at both. Now, I don't get into red versus blue team, but I do look at how politics affects the economy. So here we go. The entire Japanese government has resigned. Sputnik reported, quoting a Kyoto News Agency report. I think this is probably Sputnik. It's probably Russian, but anyway, that may be a typo. A special meeting of the cabinet started at 11:30 a.m. local time in Japan. The new Japanese government, led by Prime Minister Fumio Kishida, is expected to be announced soon. So they are going to put a new one in, but they had to get rid of the old one. Why? Listen to this. Listen to this article. Originally, the government reshuffle was supposed to be carried out in early September. Well, of course it was, but why? But now, due to the mention, they're accelerating. They're doing it in August. And it's a concept of new capitalism. The government's trying to rebirth itself and say everything that we did, this stagflation for the last 20, 30 years in Japan, hasn't worked. So now we're going back to capitalism. So for those of you who say Japan can be stagflationary forever, they just resigned their entire government and are going to come back in and start a new wave of capitalism or a new system, because that old system didn't work. This is essentially a capitulation by Japan saying the last couple of 3 decades of policy, economic policy, have not worked. We're crashing and we're resigning the whole effing government and starting over. Okay, I cannot possibly emphasize enough how important this news article is to the stability of Japan going forward. We are not going to have another 30 years of stagflation in Japan. The ship is coming down because the rest of the world can't afford to subsidize Japan anymore. Japan can't afford to subsidize Japan. This is big. And remember back when I was writing articles 10 to 12 years ago, I said, I think Japan and I think Europe are going to be the first to go because of their debt situation. Japan's worse, but Europe actually has like worsening fundamentals, I think, whereas Japan had some advantages. But I think they're neck and neck for which one's going to implode first. But we'll see if that prediction comes true. Now, why did they resign? Let's get more into the rest of the story, as Paul Harvey would say. We need to know why. It's not just economic problems. It's an event that happened. I'll get into that. Earlier, Bernama reported Japan's prime minister reshuffled his cabinet Wednesday after a slump in approval ratings, replacing the brother of assassinated ex-leader Shinzo Abe as defense minister. Aha. Okay, now we get a little bit more into it. Fumio Kishida led his ruling party to victory in an upper house election last month, days after Abe was shot dead by a man resentful of Unification Church. Now, I'm not going to get into the politics or the characterization of Unification Church. It's a religious organization. I'm going to leave it there. I don't care what they do. It's not in the purview of what I do for this channel, but you're welcome to look it up. I will, however, let you know that in my research, the Unification Church has roots in Korea. Now, I'm not going to comment on why Korea would have roots in an organization that is reported that Japanese high-level officials are a part of. I can't confirm that that's even true, but that's the rumor, and that Unification Church has strong roots in Korea. So is this some sort of infiltration by Korea into Japan? I don't, and into their politicians, I don't know. I'm not claiming it is or it isn't. I don't want misinformation, but it's interesting information, little tidbits about the geopolitical games going on around the world and how one country can affect another by influencing their officials, influencing, things other than their economies that you kind of have to look at and be aware of. Well, let's get more into Shinzo Abe. So from the BBC, Shinzo Abe, Japan ex-leader assassinated while giving speech. Now, this is back reported on the 8th of July. So it's early July. Japan's former Prime Minister, Shinzo Abe, has died in a hospital after he was shot at a political campaign event. This is according to the BBC. Abe was shot twice while he was giving a speech on a street in the city of Nara on Friday morning. Security officials at the scene tackled a gunman, and a 41-year-old suspect is now in police custody. The suspect, named Tetsuya Yamagami, admitted shooting Abe with a homemade gun, saying he had a grudge against a specific organization. That organization is who? It's the Unification Church, which is why I highlighted it. So apparently this lone gunman, I'm not sure I ever believe in lone gunmen. I think they're probably always enabled by other people, but to what extent, I don't know. And I'm not going to get conspiracy theory. But usually it can't just be one person. There has to be other people helping somewhere along the way, if only for like helping them figure out how to do it and be a sounding board or even providing a weapon. I don't know. But I would say it's probably not just this guy. But essentially, this guy was the shooter, killed Abe, the defense minister, and that's caused the entire Japanese government to collapse. And that's in this article. It says, since that event, the public scrutinizes the church's tie with Japanese politicians, and Kishida's handling of the economy. Approval ratings for the government have tumbled. They fell 13 percentage points in 3 weeks to 46%, according to a poll published Monday by public broadcaster NHK. While another survey by Yomiuri Shimbun daily showed a drop of 8 points. Political veteran Yasukazu Hamada was named defense minister, a key role given Kishida's pledge to ramp up the defense budget. Hamada, who served as defense minister from 2008-2009, replaced Abe's brother, Nobu Kishi, who has prompted concern, blah, blah, blah. In any case, this single political event has basically collapsing the political system in Japan. What effect is that going to have on the economy? I'll tell you in a sec. I'm going to come back to the stream, make sure everything's going good. Again, super chats are open if you want to contribute to the program and ask a question. I am happy to talk to you about it. I'll try to answer questions in the chat. I'll get to that in a minute. Everything looks good. We're over 300 guys. Thanks for joining. Remember, there's a poll up. Today's poll is, are China and Japan on good footing? Or is this just another global risk factor to be concerned about if you're in the West? 92% say no, they're not solid. 8% say yes, they are. Doesn't surprise me at all. Thanks everybody for joining the program. Real quick reset. It is August 16th, 2022. We broadcast live 5:30 p.m. Central, 6:30 p.m. every Tuesday. This is Cowboy Metals Live, where we broadcast from a great state of Texas and we take no BS. And today I don't have the cowboy hat on, but I'll definitely put that on next time since you guys love that. But you can't see it in the background right here on this side. All right, back to the presentation. We're going to go into why all of this matters in Japan, why we care about Japan. I told you why we care about China with foreign direct investment. By the way, the story about foreign direct investment from foreign companies, individuals, and banks is the same in Japan as it is in China. And if I went back to Santander and I showed you all the flows, you would see it's basically a spaghetti map. Everybody invests in everybody else. So if one globally important bank goes down, no matter where it goes, it's probably going to start a run on a bunch of others. That individual government is going to freak out and react. But remember what happened with Evergrande. People in the US were reacting because they know. The money managers, the bankers, the central bankers, the government officials know if one of these countries goes down, the banking system goes down, they all are going to be under severe pressure. Hence, Basel III requirements for the Western system put forth by the BIS and their attempts to shore up the banking system, which we've talked about on our channel a bunch. So let's get into the Japanese economy. So this is a little report from Deloitte Insights. It was pretty cool. I had a couple of charts I wanted to go over. So Japan economic outlook from Deloitte. Trade imbalance takes a bite out of growth. Why is there a trade imbalance? Well, think about the strengthening dollar and what that does to every other currency. It causes it to go down. So the value of the Japanese yen has lost 20% of its value. Let's put that up on screen. 20% of its value since the first couple of months of the year. Why is that? Because of strong dollar. Why the strong dollar? We talked about it. I won't get back into it. but the strong dollar has caused other currencies to weaken to the dollar. And so now the yen has less purchasing power. What has that done to their trade? Well, it's amped up the amount of money they have to get for the same goods, which is why their imports have spiked. Their imports have gone up 30-something%, almost a third, while the exports have gone down. Why? Because you're exporting in that currency. And so, and you don't have enough strength to keep basically your economy going. That's what happens. It's flipped the script between exports and imports and fundamentally changed the Japanese economy. Now, here's the problem that Japanese officials have. You've just seen a fundamental change in trade flows in the Japanese economy. This is going to affect the current trade balance. Japan doesn't want that. They also don't want a rapidly depreciating yen. If they can get a lightly depreciating yen, they can manage it. How does a central bank manage this crash of the yen? I don't know. How does central bank manage this change in trade flows? I don't know. That's a problem. And so Japan's situation just got worse. And what a lot of people assume would go on forever in Japan literally just flipped like that. This is so important, very important. The world's second largest economy, China, is having serious issues. Japan, after years of running this program of stagflation and internally financed debt, is starting to crack, and there ain't nobody to bail them out this time. Big risk factors, big mama bear, global bad boy risk factors, and it deserves its own video 100%. And this is something I would like you guys to consider. I think it's super important. All right, the poll, we're still 93% say that China and Japan do not have solid economies or banking systems. I agree with you. Last bit, because I promised last week, I'm going to go and talk to you guys about what's going on with the COMEX. So going back to the share, this is the CFTC Commitment of Traders report. We're transitioning into looking at gold and silver. Why? Because I just told you two, the largest and most important economies in the world are suffering severe problems, and there are fundamental issues that their central banks and their governments can't solve. And so now we want to pay attention to what the most risk-free, the most counterparty risk-free asset in the world that's likely to receive the bulk of the gains if the system does melt down. That would be gold and silver. So we're going to the COT report from the CFTC. That's a Commitment of Traders. And I wanted to show you a trend. This is silver. Silver, as of August 9, 2022, right off the CFTC's website. This is the latest report. And the trend that we showed you before was this. We're in the positions on the exchange. We're looking at swap dealers, which are the bullion banks. That's this column here. They are still net long silver. This has reversed a years-long trend. And if this stays for a while, a month, 6 weeks, 2 months, we know that the banks are really betting long on silver for more than one little trading period. In other words, if you look at how COMEX runs, there are 6 basic delivery months, sizable delivery months of the actual metal on the COMEX for both gold and silver. The other 6 months is pretty much just paper trading. So most of what determines the prices of gold and silver are going to be the paper trades. And one of the biggest participants in that market goes net long. By now 9,000, almost 10,000 contracts. That's significant because they're basically saying they're betting long. So this is bullish for silver. We'll see if it stands, but it could be maybe the start of the next phase of the silver squeeze where the swap dealers capitulate on their silver short positions and go long and silver's allowed to run. Again, this could be temporary, but it's been here for a while. The last 3 to 4 COT reports I've seen, and it's something to pay attention to. Whereas the managed money, the dupes, in other words, because they don't study these markets, you know, they gamble and they lose money on precious metals all the time. They have a horrible track record. They've now gone not net short. So the dupes, or not the sharps, but the dumb money, only when it comes to precious metals. I'm not saying managed money is not smart, but when it comes to precious metal, the track record is horrible. They've gone net short. So it looks like it's the silver price probably going to rise. Gold is different. And I said this last time. Here's gold. Again, the swap dealers are still net short by a whopping margin. Something like 128,000 contracts, 128,093. Is that the right number? Somebody do the math. So, and not only that, but they added more short and dropped more long. So they went more net short than they were before. Now, the previous trend in gold had been the bullion banks to do the same thing they had been doing in silver, which is to reduce shorts and go long, which would have been a bullish signal for gold. They're actually, this is a sideways signal for gold because they actually added more contracts short, or you could say a slightly bearish signal for gold in terms of its spot derivative price. So that's where we are, ladies and gentlemen, in gold and silver. I think they're going different directions, which tells me the big breakout in gold silver probably isn't here quite yet, but it's getting close. But the dynamics of silver from the physical market and the shortages that I've been harping about have caused the banks to take a position because they know they have the trading data. They're the market makers there. Plus, they have lots of client data to trade their house accounts. Smart guys. They know what's going on. And I do think it's still bullish for silver. It'll be interesting to see whether that positioning in the derivative markets and the COMEX in gold changes as well. We don't know if it'll happen, but we are going to pay attention to it. Thank you, Steve, for coming in with the question and contribution. We definitely appreciate it. Steve says, because the yen is weak, would it make sense for Japan to sell more of their US debt and exchange dollars for more yen? Yes, it would, which would increase demand for yen, at least in on their side of the ledger, and it could push up the yen. But think about it, if they sold their US debt, how would the US react? How much US debt would you have to sell to get their currency up, given the pressure and given the dollar dominance? And if you're selling, think about this, the dollar is the dominant world reserve currency, and your currency is going down because of that. So the US central bank doesn't want that to change. Well, you're Japan, you say, well, I got to change because you're killing me, Smalls. You're changing the dynamics of my economy and you're going to wreck us. You're going to blow up this big bubble we've been blowing for a couple of 3 decades. So here's what we're going to do at Japan Central Bank. We're going to sell debt, of which we own a lot, and we're getting currency back up. Well, that starts potentially a currency war with the US. So that goes against US policy. So they could, but that may develop more animosity. In Japan, I think politically is still a big ally of the US, so they could, but they may do it in tranches that don't necessarily materially affect the dollar or the market for US debt. And so there's probably conversations right now, I would imagine, between Japan and US officials going on exactly about that and how to manage that. Good question, Steve. Thank you. Nicole G with contribution $20. Nicole, I don't see a question, but if you have one, throw it out there. Appreciate it very much, you supporting me and everybody here supporting the channel. It does make a huge difference. You guys are awesome. And I often say I have the best audience. I'm going to troll through the chat here and see if there's any more questions. Oh, I do see some from Nicole. Thoughts on metals miners right now? So Nicole, I actually have been asking around all the other people in the market about the metals miners. It seems as though this might be the most stupid miner market we've ever seen, because especially if you look at gold, let's look at just gold miners for a minute. They're printing cash at gold prices 18, 1900. They're printing it because the average cost to get out of the ground is somewhere between 1,000, 12, 1,300. So they're printing, a third of that money is cash. Of course, they have other expenses on top of that mining cost, but most of that's going to be profit. So gold companies mining companies are turning money over, most of them. The sector is very robust in terms of earnings. And at the beginning of this year, the GDX and the 𝙂𝙊𝙇𝙍 gold mining index, gold and silver mining indexes were up while the rest of the stock market was down. But since this is a big liquidity event going on to free up cash in the economy, people had to also sell their mining stocks. They had no choice. They had to liquidate across the board. Why? We have too much debt, not enough dollars. We need liquidity. People sell. They sell their assets into recession to get liquidity. To think about it. If you lost your job and you're in recession, you may sell your gold and silver. You may sell your car. You may sell possessions. You may empty your bank account. Why? You need liquidity. So it's a liquidity event. So where the miners are right now is, I think, in an artificial low. I think fundamentals, especially for gold, is very bullish. Silver, a little bit less so at these prices, but it's not horrible. And a lot of silver companies are still making money, especially as a lot of them have expanded into a little bit of gold to make their balance sheets a little bit more attractive instead of just being primary silver. Happened with First Majestic. It happened with, Impact Silver is considering Mexico. It's happened with other companies, Gold, which is actually a big silver company, but has some gold, and some other companies as well. They're looking to get into gold. There's another one that we announced on Twitter. Fortuna Silver actually has a lot of gold, and we'll have them on the show next week where we talk about what they got. So overall, the silver miners are doing okay. Gold's doing a lot better, but the fundamentals of the miners are really strong, and their multiples are so low. It's like almost an historical low. Like, I have people combing data that do this for, a living on the stocks like I do. Like, have we ever had a worse period? And the fundamentals are so bullish for the mining stocks right now, and yet they haven't responded, that you have to think that there's going to be a snapback at some point. I mean, you can't keep going like this. It defies logic. If an industry is doing very well, is doing much better than the rest of the industry, it's pumping out money, and it's producing a known desired good with a very robust market, Why aren't the multiples of the stocks of those companies going up? Because there's no investment. Nobody's investing in those companies right now. What do you want to invest in to make money? What other people don't when you're investing low and selling high and cycle investing? What have I said I do over the years? So for me, I can't tell you what to do. Disclaimer, not your financial planner. You got to do your own research and ask your own financial planner. Don't take my advice as trading advice. That being said, what I would do is buy into them, because if they're so damn low and it doesn't make sense based on fundamentals and they've got actually cash flow as an industry, why are they so low? It's just general investor disinterest. It's a buying opportunity. They're going to come in. If the rest of the economy is suffering, earnings reports are down for American companies across the board, and they're for a lot of companies across the world, in the Western world. The money's eventually going to flow to where it needs to flow, which are people that are producing profits. Eventually, it'll go there. It's just not there yet. So that was a really long answer to your question, Nicole, but I think it deserved a good response, because I get that all the time. Where are we in the miners market? Well, we're in a market that defies logic. Logically, that market should be doing well, but we haven't seen sector rotation from the generalists into that market. That's why it's not there. You haven't seen the inflows into their stocks, and nobody's lending a whole lot of money for especially the junior mining stocks right now. It's not to say the spigot's completely turned off, but I've had people well connected with the capital markets in the US and Canada tell me that the spigot flow for mining stocks is down, but that's actually a bullish sign, because if you don't finance the resource sector, you don't have goods and services, you have no economy. And think about China for a second. What does China need to manufacture stuff? What does Germany need to manufacture stuff? What does Japan need to manufacture stuff? They need commodities. If you don't have investment for the last 10 years going in the commodity complex, what do you have a shortage of? What do we see the last 2 years? Not just supply chain, but basic production issues with what? Base commodities. Where do you put your money as a smart investor if you think something has to go up to deal with a massive worldwide issue? You put it into that. That's what I would do. You have to make your own decision. So I would say they're a screaming buy right now, but who knows when they'll recover. The market has to basically say we want a sector rotate. I think some of this liquidity event needs to, the liquidation of assets needs to slow down so that people start coming back and investing, and then they can sector rotate out of tech or whatever they think is overvalued in the mining stocks. But we have to have the liquidation finish first, and I'm still seeing liquidation not only in the US but around the world. So hopefully that answers your question, but we'll get there. I mean, the liquidation phases last, but they don't last forever, and neither do recessions. So eventually we'll come out of it. But I think the liquidation event will end. We'll get into the next phase of the recession. Money will start to rotate back in. People will put it in the precious metal mining stocks. It'll go back up eventually, and we'll get there. Good question. Thank you so much. I'm going to close the poll. 89% of you say you don't believe Japan and China are solid. It's no surprise. A lot of data that we provide today, and you guys are savvy and you guys follow all this. What are the implications? Again, I'll just restate it. I'm going about 40 minutes, so we're going to wrap this up. If China and Japan banking system come under trouble, we're in trouble. Everybody's in trouble. Why? Everybody's cross-pollinated their investment. And the research report I showed you shows that since 1984, the world has been piling money into China, but especially the US and the Western world. And a lot of it's been our banking system. A lot of it are corporates, a lot of wealthy individuals. So it could, if Japan and China banking system comes under severe stress and that affects the portfolios of all those entities that invested in those countries, it's going to cause at multiple levels, at the corporate level, the sovereign level, the investor level, the investor market level, it's going to cause issues, and it's going to hit the banks and tighten them up. Because think about the banks. They only carry so much assets. We talk about high quality liquid assets in Basel III. They only carry so many of those to offset risk. Well, as the global risk goes up to the banking system, those ratios that we got defined under Basel that so far they haven't really been able to fully meet anyway, so they're not fully compliant, those should move up, because as risk moves up, you look at the equations in Basel, you have to have more assets backing your positions. They can't even get to the standards that Basel III set in 2014. That was 8 years ago. So the Western system's not ready for this. They're not ready for a China and Japan collapse. So what's going to happen? Well, as the banking system starts to melt down and it spreads, what happens to those derivatives at the top of Exter's pyramid? They start to collapse down. Think about a bridge that collapsed down in an earthquake. Boom, ba-boom, 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 ba-boom. And you'll get closer and closer to gold, and all that value is going to flow back into gold. Okay, that's why gold, as per Basel III, is a big part of the banking system. That's why China and Russia have been buying a crap ton of gold. and industrially silver demand will be strong. But that investment demand that comes in when we have a bank run anywhere in the world for silver is going to spike silver prices. That would be a big catalyst for another move up in silver. You could still continue to have the same situation in silver right now where industrial demand overwhelms the available market. I've been talking about potential shortages the last few years that are now starting to manifest very clearly on all of the markets. So industrial demand could overwhelm and cause silver to spike. But I don't know if we're going to get to the point where we physically exhaust all the silver available before we have that financial event. Is it China? Is it Russia? Is it a black swan? Is it derivatives? We don't know. But when those financial events finally crack around the world, and they are, because you're seeing the whole spring in every country, in every market, that's when you're going to see that last big rush into silver and that last, the beginning of the end phase for gold, which will go longer, and you're going to see those rates spike. That's what I think is probably going to happen. That's my thought and view on it. Would love to hear yours in the comments. Put comments below. I'll come and answer after the show, and we'll talk about it. I think that's going to do it for me today, guys. We peaked at almost 400. I love you guys for showing up to this. Thank you so much for doing that. I endeavor and strive to provide you the best research I can. Of course, we don't charge for it, and we do that because we love the community. And at this point, I just want to try to help as many people as I can, because I think this is going to get nasty before it gets better. Now, on the solution side, on the positivity side, there are going to be lots of opportunities for investors as we go through this. We're still going to be here. America's not going to just disappear off the map. It's just going to be a change. But if you weather that change, you can come out on the other side doing very well. But we got to spread all this knowledge so that people prepare, because I think they may be running out of time. So let's talk about the negativity with the eye on the positivity. Let's talk about the problem with the eye on the solution. We know what the solution is: gold, silver, getting out of debt, protecting yourselves, networking, doing things like that, and being aware and educating yourself and putting yourself in a position to survive and to thrive. But we got to know what the problems are, and that's why I cover them on the channel. But just remember, we do the solution every day. And as a reminder, last reminder, I talk about this every Tuesday. We have a deal with Arc Silver where we can get you some of the lowest premium silver and gold. If you want it, you simply go to our website and click on precious metals deals and fill out the form. That'll send a form over to Ian at Arc Silver and his team. And then we'll go back to you, whitelist their email address and phone number. It's on the website. And if you're looking for low premium gold and silver, it may be one of the best ways to get it. And he has 5 or 6 wholesalers he works with, and he often can give you a really good deal you can't find anywhere else. Now, he's not going to carry every denomination of coin. That's not what he does. He's trying to bring you low premium gold and silver. So he's finding the deals and only giving you the deals. And the reason he can do that is because he doesn't have to stock all the rest of it. So he's essentially like your coupon for your gold and silver, or your Craigslist for your gold and silver. He researches deals and puts them in front of you. All you got to do is push the buy button and contact him. All right, that is going to do it for today, guys. Thank you so much for joining the program. I think we have shown a lot of good research as to why China and Japan are in serious economic straits and how that likely will affect the rest of the global banking market. We're going to continue to follow it. It didn't stop at Evergrande, just like I said. It spread across the entire lending complex in China, just like I said it would back then. Check the tape, it's all in there. And, again, as we continue to do this research, we're going to continue bringing it and try to predict these things ahead of time for you to give you a little bit of runway. At the end of the day, we can't stop what's coming. We don't have that power. None of us individually do. What we can do is give you some runway to prepare for it, and that's what we do here. Appreciate it very much, guys. Thank you so much. Till next time, this is Rob King, Gold Silver Pros. Until next time.